The CFPB's Reverse Mortgage Guide answers questions and raises others. Welcome to the Industry Leader Update, brought to you by Reverse Focus. It was only 2 short years ago that the CFPB, or the Consumer Financial Protection Bureau, issued its first report to Congress on the home equity conversion mortgage, or the federally insured reverse mortgage program. In this week's segment, we will examine the questions this guide addresses, as well as the questions that it raises. Now, first, the guide begins by admonishing potential borrowers to do 3 things. 1, do not sign loan documents until you understand how the loan works. 2, know your options besides a reverse mortgage. And 3, speak with an approved HECM counselor. Second, it addresses the typical questions as to who can remain in the home, the obligation to pay property taxes and insurance, the length of time spent in the home, and the advantages of waiting. Third, when it comes to waiting, the CFPB rightfully states it is better to wait until both homeowners are 62 or older, as a younger non-borrowing spouse would not be eligible to continue receiving monthly tenure payments or have future access to the line of credit. What is not mentioned are the risks of waiting, when home values may decline or interest rates inevitably rise, reducing available proceeds. Couples with a younger non-borrowing spouse may need to secure a reverse mortgage in today's low interest rate environment and then make other arrangements to offset the potential loss of monthly tenure payments or access to monies in the line of credit. However, it is ironic, while HUD's new non-borrowing spouse policy helps prevent displacement of younger spouses, it also creates a substantial financial risk to the surviving non-borrowing spouse. Now, one could have hoped for a provision to provide for a reduced monthly tenure payment based on the age of the younger spouse to avoid future financial hardships and possible displacement if unable to pay for taxes and insurance. Fourth, who is the borrower's best source of sound information and facts about the reverse mortgage loan? Well, the Bureau states that a HUD-approved counseling agency is. Now, here I would take strong exception to this claim. HECM loan officers should and must be the first point of education, explaining the nuances and risks of the HECM, not the counselor. Now, in my opinion, the counselor should only be reinforcing the facts already presented to the homeowners. Many originators today have expressed concerns about inconsistent and conflicting information periodically presented by certified HECM counselors. Now, this not only confuses a potential borrower, but may discourage them from proceeding with a loan that may be in their best interest. Now, one possible solution could be a national HECM-specific test that ties into existing NMLS licensing and educational requirements. Overall, the CFPB's 4-page guide does present an acceptable resource to help consumers make an informed decision. Now, share your thoughts on the guide and the Bureau's view of a HECM counselor's role in the comments section below. Have a great week.